Hi, this is Dan Encell, Prudential California Realty. Today is Monday, March 1st. Here's what's going on. A couple headlines, pretty interesting. Fannie Mae seeks $15.3 billion in federal aid after fourth quarter losses. That's billion with a B. That brings the total between Fannie Mae and Freddie Mac to $127 billion that they've lost, basically insuring, buying mortgages and insuring them. So they are not out of the woods yet there. But the $15.3 billion loss in the fourth quarter is pretty good compared to the $27 billion loss the fourth quarter a year ago. So bad, but still heading in the right direction. Something we talked about last week, home sales in the West starting to inch up. Finally, the western states are catching up with the rest of the country in terms of enjoying some of the rebound of the real estate market, so that's good to see out there. The most positive one of all the headlines, though, jumbo mortgage market is beginning to thaw. Finally, some signs of life out there from lenders that will actually loan on the jumbo market there. Traditionally, the difference in rates between a conforming loan that somebody like Fannie Mae or Freddie Mac would rebuy and a jumbo loan where they don't rebuy them was about a quarter point. There wasn't much of a difference there. But once the market started to turn south there, the differential between the conforming loans rates and the jumbo loan rate got as high as 1.7% difference, so a huge discrepancy between the two. Now that discrepancy is down to just about a 1% difference there. So jumbo money is starting to get less expensive. That will help our market tremendously. Equally important, more lenders are believing in the product there and starting to offer these loans again, and also loosen up the requirements on how much of a down payment the buyer needs. Typically it's been 20, 25, 30, 40% there. Moving downward, though, more towards the 20-25% again, which again makes it much easier for a buyer to qualify and purchase, a higher end property there. So that's what's going on a national basis. Here's what's going on in Santa Barbara here. Just got the statistics for the month there of February. For Santa Barbara as a whole, 248 new listings, 84 properties sold. That 84 is pretty consistent with February's we've had the last couple of years also, so it's not terribly different there. 154 price changes and 65 properties expiring. Again, those numbers are all pretty consistent with what we typically see during a February the last couple of years. Here's what's going on in Montecito. 41 new listings. That's a little higher than we would normally see here. We only had 11 sales during the month of February. That is definitely lower than we're used to. So again, I would like to see that number somewhere in the 15 to 20 range there. So the number of sales is off, the number of listings is up. Sort of a bad combination, but February is just 1 month. We'll see how it tracks as we get a little further into the year there. 24 price changes and 18 expired listings there. So again, hopefully this, new surge of activity in the high-end jumbo lending market will really positively affect our market sometime later on this year. There's always a delay effect from when the good news happens to when it translates into additional sales for our market. So that's where we're at this week. Have a good week.